Hi, Leonardo at marketcrash.money. Since it's Sunday, I thought I'd share something a little bit more entertaining than going over some boring charts. Here's what I've got. A list of some of the best trades of some of the best traders that were placed since the early 1900s. I am in the process of putting together a video which will have a longer list of a number of prominent trades that were placed on the short side of the equation. However, this video illustrates a combination of both some good short trades, some good long trades. The main goal for sharing this video clip with you is that hopefully you will be able to identify one common thing that all of these trades, whether they were placed on the short side or long side, of one common thing that they all share together. And that is actually a proprietary term that I have developed here at marketcrash.money that I call TRO, or Trend Reversal Opportunity. All of these trades, if you observe carefully, were placed at the time when the stock was trading close to its all-time high, or the markets were traded close to their all-time highs to profit from the fall lower, or the trades were placed at the very bottom to profit from a significant move higher. If you are wondering what would be the next great TRO type situation, if you're wondering what are the next great stocks or great sectors that would make for the next great big short, make sure you watch the video till the end, because I will disclose one idea that will be so shocking and yet so simple that I think it will make sense to everyone.
Glitter and glamorous lifestyle. Call it the sharp brains, the right timing, the right patience, or plain sheer luck. Here are the best financial trades of all time. And don't forget to subscribe to the channel by clicking the red subscribe button. Number 1. Jesse Livermore. His first significant trade was shorting stocks just before the San Francisco earthquake, which made him $250,000. He then shorted the 1907 market crash and made $1 million. Then he made $3 million shorting wheat in 1925. The big money came when he shorted the entire market during the 1929 crash and made $100 million. 2. John Paulson. John Paulson was one of the very few people who predicted the housing bubble burst in 2007 and 2008. He shorted the subprime mortgages just before the financial crisis, and his hedge fund made around $3 to $4 billion. Number 3. David Tepper. In 2009, just after the financial crisis hit, everyone started selling bank stocks. David Tepper, on the other hand, bought huge quantities of big bank stocks like Citigroup and Bank of America. By the end of the year, when these stocks bounced back, Tepper's hedge fund netted $7 billion, of which $4 billion went to his own pocket. Number 4. Jim Kanos. Jim Kanos analyzed the company Enron for 2 years from 1999 to 2000. He came to know what the company was lying about, pretty much everything, and shorted the Enron stock when the stock was at $90. Jim Kanos was proved right when Enron's scandal became publicized and the company filed for bankruptcy in December 2001. In the process, he pocketed millions. Number 5. Paul Tudor Jones. He used technical analysis along with historical data to predict the market crash in 1987. He was massively short on stocks and gained around $100 million when the Dow took a dip of 22%. Number 6. Sir John Templeton. 8 years before he died in 2000, just before the dot-com bubble popped, he shorted a whole bunch of internet stocks. When the dot-com bubble burst, he made $80 million in a few weeks. Number 7. Andy Krieger. In 1987, just after the Black Monday crash, investors dumped the US dollar, which is generally considered a safe currency, and rushed to other currencies. 32-year-old currency trader Andy Krieger realized that the New Zealand dollar, also known as Kiwi, was dangerously overvalued. He shorted millions of dollars worth of Kiwi, netting his fund $300 million.
I hope you were also able to observe that most of the fortunes were made in a very specific short amount of time on the fall of the stock or the market overall, which in my view clearly illustrates that having the right strategy at the right time really makes a huge difference. We clearly observed that the markets do fall much faster than they go up. Hopefully you've also picked up on the fact that the money equivalent from, let's say, 1907 and 1929, where Jesse Livermore makes, 100 million, would currently be equivalent, adjusted for inflation, to about a billion and a half. So where lies the next biggest, greatest opportunity? Well, everyone probably heard so far about the big looming crisis in the student loans. Well, the question is, when is it going to happen? When is the bubble going to burst? And which stocks are going to be affected? Over the last couple of weeks, I have actually been compiling a list of educational stocks, which surprisingly are currently traded close to their all-time highs, despite of the general market trending much lower. So if you're curious what those stocks are, when would be a good time to get into shorting these educational stocks? Because there is no doubt that the student loan crisis is just around the corner. But when will it actually impact these educational stocks? If you're curious, if you're looking for some new short trading ideas, if you are a brand new trader or an experienced trader looking for a new strategy, visit marketcrash.money, click right here, how to profit, schedule your coaching, training, consultations on trading options. Do it now, take action, and make your 2018 the most profitable year ever.